I want to quickly do a mic check. I believe I'm live. Just want to quickly do a mic check. I believe I am live. Can you guys hear me? Mic check. Sorry. Just want to do it quick. There we go. All right, so if you can hear me, please do let me know. If you can hear me, please do let me know. I got some feedback, so it looks like you guys can hear me. Send this to the public Telegram group. Okay, good afternoon, everybody. Shake my hand. I'm just gonna start. Thank you so much. Hey, Mr. Mbasa, we need to have a need to catch up, buddy. It's been a crazy week, buddy. It's been a crazy week. David, good to see you, man. Good to see you. Okay, so I ran late because I really felt like I should brew a nice, good cup of coffee there. And yeah, sorry about that. That's out of the way. Right, guys, so I've got a couple of assets to go through as usual. I've got my trading plan that's, semi-automated. And by that, I mean, I just sit and forget. All right, I sit and forget. That's just how I like to do things. And hey, Alan, good to see you too, buddy. But that being said, because I am trading in clusters, I need to find more clusters to keep that money rolling into next year. I'm not so sure, by the way. I mean, it's very important I put this out. I really had not a bad trading month, but I was so busy traveling first 2 weeks of November and then from the week of the 22nd, which was a Monday, which was this past week, I did absolutely nothing. It was my partner's birthday on Monday, so just to make it feel special, we went away, blah, 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 during the week, all that kind of stuff. So I've missed 3 really groundbreaking, hardcore trading weeks, Some of my pending orders obviously were triggered and went well. I know AUDJPY sales are all done, but I've lost 3 weeks by design. Apart from trading, I do a lot of other things. So I don't know if I'll be able to cash in $16,312 US by the 16th of December. If you guys recall, I did take profit of all the Euro USD trades, which put me to about 4,000. AUDJPY trades have put me up about 2,500 US dollars. So I'm up 6,000, right? So I don't know if it's realistic for me to say in the next 15 days, unless if I'm intraday trading. And if I'm intraday trading, it's possible, but I won't get those signals out to you on time. All right. So what I want to do with the challenge is everyone must get the pre-setups just before the remote course. But let's see what happens today. Let's see what we can find today. So I've got 2 options. Either we concede and say the challenge is over on the 16th of December, and we see how far I got, we see how far you got, or we just keep it pushing, right? So for me, I like just keeping it going, right? So I'll scrap 16 December and we make it 16 January or whatever. And we increase our targets or whatever, but there's no pressure. Money flows consistently. And I think that's a good attitude. Right, guys, so good afternoon. Shake my hand one more time. I hope, God, a very noisy Rottweiler. I forgot to release him. He's just right outside my office window. So you're gonna have to bear with me there. Right, so I think there was a question, and I'll have to remind myself on the public Telegram group, if I can just quickly try and find it. Could you look at NASDAQ, US30, and SP 500? I just want to start with that. I want to start off with the indices, right? So Mr. Mbasa asked me to look at the indices today. Right, so Mr. Mbasa and everyone else, this is NASDAQ in front of us. And obviously, it's 10 times more beneficial if you're a 365 student, because I'm not here to teach, I'm here to do like a war room, right? So well, the stuff that I want to quickly go through and elaborate is fundamentally based on people who understand how we trade. But if you don't know how we trade, if you stick around long enough, you'll get a lot of free signals, and you will actually start to see there's actually a right way to approach markets and a wrong way. All right. So let's start off with NASDAQ. So let's start off with a couple of things that we need to remember when trading indices. Number one, they're company stocks, clustered, grouped together. It's like a basket of stocks. So NASDAQ 100 is the top, 100 tech companies, you will get a variation of movements that affect the basket, right? So what I do with senior traders in the afternoons is we trade these stocks individually, not all 100 of them, but the most liquid. So Alphabet, Google, Apple, Tesla, etc., right? In the pre-market, we also do option calls, which is a different type of trading. And then we come back and capitalize on how the entire basket, is moving. Now, my personal bias, which has got nothing to do with a single human being on this planet, my personal bias is I never, ever sell indices unless there is an incredible market crash. I never sell indices on corrections. I never sell indices on retracements. Why? Because this is a buy profile asset to me. All Nasdaq does is go up, right? It's been buying, right? So what I want to do is, well, when price is going down, I want to bunker down and find a good place to buy. And when I find a good place to buy, I want to try my level best not to get out of that position to maximize on it, because that is what a buy profile asset does, right? Buy profile asset, you are guaranteed 9 out of 10 times in a bullish market and in a neutral market that a buy profile asset will just buy. In a bearish market, you're guaranteed that the dips will hit harder, but it will still, if you look at it from an annual perspective, it will still, slightly outperform, right? So the greatest, safest world's investment vehicle by Warren Buffett is the SP 500. You're guaranteed 9 to 10% of your investment funds, right? So you do that for 10 years by compound interest, you're a millionaire. Simple, right? Because that asset, by its genetic nature, pushes us forward, right? So Nasdaq 100 tech stocks, very sensitive to sentiment, very sensitive to a lot of market information, right? So there's something you have to remember. Nasdaq 100 tech stock, extremely sensitive to tech stock, extremely sensitive to news, extremely sensitive to the DXY movement. Okay, we haven't looked at DXY in a long time properly. That's because I think the show is over, right? The dollar is bullish. We were right about our analysis. Now we just make money off that trade. SP 500, a massive vehicle, investors vehicle, right? So there you're looking at what the wealthiest of the world are kind of like putting their money in and how they safeguard that. US 30 reflects the heartbeat of the US economy. It's the industrial plus banks mixed in the top 30 of the Dow Jones, called the Dow Jones Index, right? So those three indexes are different but similar in many ways. If you go through my remote course, module 2, one of those later lectures towards the end as you're about to complete the course. Remote course, by the way, got a couple of days left to get it back on discount. It looks like 48 hours. 48 hours to get all this information just for $100 versus the $300 US, your move. But if you go through the remote course, towards the end of that whole segment where I'm talking about indices, there is something called a primary market, and I keep track of that stuff. Primary markets will change, guys, right? Based on sentiment, right? Based on market sensitivity. The primary market that indices might follow might be US 30, then it'll switch over to Nasdaq, it'll switch over to SP 500. Rarely is the SP 500 a primary market, right? In fact, I like to do a lot of correlation with the SP 500 and the dollar, right? But for between Nasdaq and US 30, these two swap in terms of who's moving who. For the next 2 weeks, for the next month, for the next week, based on sentiment, right? So it's nice to, before you place a trade on Nasdaq 100, make sure you analyze US 30 and SP 500 because you could get a better dip, right? So you'll notice that there were times when Nasdaq was buying, and US 30 was selling. So naturally, all my focus was on US 30 because I wanted to buy the dip. If Nasdaq is at an all-time high here, you'll never find me. You will absolutely never find me. That's very important for me to say. So I'm not so sure if our brother here was struggling with entries or whatever, but if an index is at an all-time high, I don't know. I don't know if it's going to go up 200 points, 300 points, or if it's just going to start falling tomorrow, right? So our job as 365 traders is very ready to become prophetic. We want to avoid that. We want to avoid always knowing. And I know that's kind of like my teaching style, that we know where markets are going. But at an all-time high, we don't. We have an assumption that it's going to go higher, but we don't know how it's going to get there. Is it going to go higher immediately? It's going to go higher by a correction. So what we like to do is we like to let the big boys move first. We are not shy about that. Please always allow the big boys to move first. And what that means is during all-time highs, you will barely see me buying. You also won't catch me selling. Very rarely. Like you see this here, from a technical perspective, I'm on the weekly time frame, number one. So just take note of that. Every time price hit this upper trend line, it sold, right? So you could have tried to sell here and you'd have been burnt, despite the data that every time price hit up there, it sold, right? I never trust sells on buy profile assets unless it's a crash. It's a real market crash, and I'm ready for the market crash in the case that I foresaw the market crash coming and I didn't wake up to a market crash, right? I never want to catch a fall in life. And you can catch this sell nicely, like on the daily time frame, you'll get a bearish engulfing pattern. It's beautiful, like exactly what we've been saying for the last 2 to 3 weeks on Bitcoin. Remember our Bitcoin chart? I told you dangerous to buy. This thing is selling. I gave you the futures data, COT data. I told you how when the big boys come in, when the EFT futures was the original one was agreed upon. I told you that big boys are going to spend a lot of time pushing this asset down, and they've done that. They've done that very well, right? I don't know if, I hope no one is panicking who follows our channel. So this is very, very important, because fundamentally speaking, these assets think the same, because the rich people are only top 10% of our society. So the rich people in our society, the top 10%, are going to do the same thing in most asset classes. So once you learn smart money concept, supply and demand, you've got the game plan covered, right? So long introduction to a war room, but it's absolutely important that you really understand that, very much so. Right, so let's talk about NASDAQ, but with NASDAQ, we're going to talk about USD at the same time, and also analyze SP 500 before we get down to this list of FX pairs that I'd love to look at, right? So I'm on the weekly time frame. Like I said, that's the mayoral time frame. At an all-time high, 365 students, start there. Because you want to know, and your assumption has to be, let's say there's a correction, let's say there's a retracement, right? And I've been saying that since this green candle here. As soon as price breached this green candle and went above, I was like, okay, fine, there's no ways markets will overextend like that, because that would be too parabolic. So let's say a correction comes. Where would price need to stop? So you take your module 1 and your module 2, and you start to find those 6 or 7 different supplies of demand on this time frame first. All right. So a long time ago, about 2 weeks ago, I put this here when I did another video for you guys on the YouTube channel around NASDAQ and and its habits. And I said I want to buy NASDAQ there. So I haven't bought NASDAQ because NASDAQ has not yet come to me yet. I know that if NASDAQ keeps drifting up high, that's fine. It's not stressful for me, because it means my buy is going to have far much more of a deeper reach. The higher NASDAQ goes, one day when it comes back down here, all of this is profits, but it's no longer just risky profits. The big boys have shown me the way. Now, on the weekly time frame, before I get ahead of myself, I won't lie, there's a holding here, right? And if someone's wondering about the lines, are not support and resistance lines, although I don't know if how many non-365 students are on the live today. It looks like today we've got a small group of people, but that's okay. Right, so on the weekly time frame, I know there's a big focus there. I don't know if price is going to come here next year or this year or later on in January, and I don't care, right? That's not really my goal. So what I've done is I've acknowledged that there's a weekly area there, but I've also acknowledged that there's now a swing low, swing high. There's a swing low here and a swing high on the weekly. So naturally, a bullish Fibonacci from the bottom to the top gets me a 61.8% discount somewhere in this white box, right? So this white box there that I've always wanted to kind of like wait for, right? So that I know there's going to be a big discount here. Now, if I switch back now to the time frame of where all the fun is had, which is a daily time frame, we're going to go back to the weekly shortly. There's one more thing I want to show you is, and I hope I'm coming across clear. Sorry, I'm late to take off small legal. Hey, man, you should hear the threats that I make before I start my war rooms. I'll take away TV. I'll take away your iPad. I'll kill the internet. Gotta love these kids, man. Right. So there we go. Right. So this area here is that 0.618 retracement area. And if I just drag it here, I'm happy. I'm happy risking money there. I don't know if it's going to hold, right? Because remember, on the weekly time frame, this is a good demand. There's a lot of calculated, a lot of money waiting down there. But in the event that they don't want to do a full completion of a move and they just want to take a discount by 61.8%, which is the most common discount in all financial markets, this is a good place for me to buy. So I've got a couple of pending orders on 15,400, 15,300, and then my stop loss. I think if I remember, if I switch on my MT5, I'm sure my stop loss is just above 15,100 or at the 15,100 mark. This is where I'm waiting. And so this for me did not bother me. And when price came back down here, I was not eager to pull the trigger. And this happened. You would be surprised. So this could happen this week. Right, you could get a technical pattern like this, right, which is generally called head and shoulders. So now price would do this. Why would price do this? Well, on the weekly time frame, we've got a bearish engulfing pattern, and we know price must extend up, right, to the bearish engulfing pattern to retest it before coming down. When it retested, you'll get a pattern like this on the daily. When you get a pattern like this on the daily, retail traders and a lot of traders across the world will draw a neckline. When they draw a neckline, they will assume that price must go down. Some of them will be right, some of them will be wrong. I don't care. I want to buy. I'm not looking for sells. Now, if you are looking for sells and that's your style, remember, I've been trading for a very long time. So I now know what causes me pain psychologically. It's important to know that stuff about the markets. I know that my mind, the human mind, is technically, strategically based to protect me from any type of pain, relationship pain, money pain, stranger pain, whatever, flight or flee. So I now know that because of my terrible history learning how to trade, before I knew how to trade supply and demand in all these markets, I know for a fact that the most losses I made a lot of the times was selling indices. So because of that, that's my relationship with these assets now. I can't fix the past. I avoid it. I avoid it so as not to trigger terrible trading decisions. So one of my trading rules is don't sell. I don't sell this thing. So there are many selling opportunities that will be profitable for anyone here, right? If price gets up here, that's a good place to sell. That's 16,500. It really is. Right? Maybe there'll be something that'll couple that particular sell point. I won't be in it with you because I have no interest. Price might actually just get pinged out somewhere here between what's this now? 16,300 and 16,400. That might be a good place to sell, etc. While you guys are selling, I'll be busy with my everyday life and trading other things that make sense to me. But when price gets down here, I'm going to get triggered in the buy. And I'll now know that markets have printed all these orders. So this is no longer new territory for price. If it's not new territory for price, then this market inefficiency must be filled with the buy orders down here. So when I know I get triggered here and it doesn't hit my stop loss, I'm swinging. I'm swinging until the next all-time high or up until this point here. So it looks like price struggled to get past, we'll call this 16,800. So I'll take a take profit there. Or this could be the swing that I asked you guys to use. I say to you guys, with indices, create a second account and start to swing these things and don't close. Simple. Just if you simply want to make money, you're not here to become the world's best trader. You're not here to win the always right Olympics. You're not here to be a sensei. You're just here to better your life and you just want to make money. You need to start finding good places to buy and hold. And you hold through the storm. The reason why indices kick a lot of people's ass is because indices are costly. So you guys are trading them on very small accounts. And so half the time, you're always close to being margin called, or you're always risking 60 to 50% of your account just to hold one trade. And so because of that, it is fundamentally, strategically, completely out of fear, better for you to take $100 quickly and close, right? So you're watching this thing on the 1 hour H4 time frame. Why? It's treated like a simple asset. That's why I teach this stuff right at the end. Now let's look at, what did I just delete now? There we go. Let's look at NASDAQ on the weekly time frame so I don't waste too much time teaching. We've got a bearish engulfing pattern. So now I need proof. I need the dating history of NASDAQ with bearish engulfing patterns. This is a bearish engulfing pattern. What I want to establish is a pattern. I understand my order blocks, I understand my supply and demand, but I want to see the level of respect this asset has for module 2 supply and demand engulfing. So there we go. So this is one. This here is not an engulfing pattern. No, so it doesn't matter. We're looking for engulfing, bearish engulfing patterns on the weekly time frame. Here's the first one. After a bearish engulfing pattern on the weekly time frame, when price hit this white line, price fell for another 2 to 3 weeks. Interesting. Fantastic. Let's move on. Is there another one? Look, here's another bearish engulfing pattern. After it hit that white line, bearish engulfing pattern on Nasdaq, price fell for another 3 weeks. Interesting. All right, I'm going to keep scrolling now. Outside of this channel that I started to track historically before that, so now we're like in June 2020, because this channel, by the way, this upward channel that you're looking at has been around for over a year. Buy profile asset. This is literally when I started buying up this channel, 2nd of July 2020. That's all this thing did. Yes, there were red weeks and green weeks. It just kept going up. At the end of the day, if you get one buy order here and a stop loss just right down below, you were never kicked out for a year. You cannot tell me I'm lying. It's impossible, right? The yellow circles that you guys see, by the way, these are all my different buy orders on Nasdaq, right? In the last few year, I guess, of my swings. So I'm not really into the stuff, but when I do buy, I buy big and I hold big. Right, it's a beautiful way to kind of like see a lot of capital gains if you're patient for like a quarter, just for one financial quarter, 3 months of holding. It's massively beneficial. Right. Anyways, we're in search for more bearish engulfing patterns. So far in the last year, every time there was a bearish engulfing pattern on the weekly time frame, price falls for 3 weeks. Let's break out of the channel. There's not one, so we move on. Here's another one, bearish engulfing pattern, not even in the channel. In 2019, price fell, was red for about 3 weeks. Another one, 4 weeks. Not one. Another one, really fell for like 2 months, weekly time frame, 2 weeks. So every time there's a bearish engulfing pattern on Nasdaq, historically speaking, doesn't mean it's going to happen this time around, but I now have confidence, I have data, I have enough information to start to speculate, right? This is called scenario analysis, and nobody does it like I do because I haven't taught anyone yet, right? So scenario analysis is something that I need to get around to. But those of you in the academy, is in module 3. Scenario analysis is just a big thing in module 3. There are 7 big questions you must always ask yourself about an asset. So there's a potential that I could get 3 red candles coming down, or 2 red candles at the very least after this. This could be another red week for Nasdaq and another red week up until Christmas. Supply chain issues are still pending, right? All that stuff is there. It's not a dead set guarantee, but it's a possibility, true or false. So if that's the possibility, I'm going to put my ghost icon. I'm just going to choose. I'm going to choose this one, although that's not even a bearish engulfing pattern. All right, so I'm going to take this one. I'm just going to copy from here to there. This is really not even that accurate, right? Because it's not even a bearish engulfing pattern, right? I could get, that's better, right? So we could get more movement like this into this area of value where I want to buy. There's a trend line willing to catch it. There is a 0.618% area of value on the Fibonacci. There's a valid, strong daily order block, and there is reason to believe that price will drop, which means if you want to sell, you're more than welcome to. I'm just making this case right now. Before I come back and give the actual signal, let's go to US 30, because like I said, very important to kind of like see both. Interesting. So remember what I said before, something about a primary market and a secondary market, a market that will move first and then drag all the indices together. Why? When you think company stocks, you think national economy. If the national economy is tanking, the national economy is tanking, right? So look at US 30. Nasdaq, by the way, just in case you've forgotten, looks different. Looks something like this, and then looks like here there's a bearish engulfing pattern, and it hasn't started falling. It's about to fall potentially. But here in the Dow Jones, which if you remember, I said the US 30 really reflects the heartbeat, right, of American economy. This is a mixture of banks and industry. You can see that the Dow has already had 3 weeks of falling, right? Literally, it's in front of you. This is like 1, 2, 3, right? And these weeks have been simply red. Guys, I appreciate all of you around. If you like this stuff, please don't forget to like the video. Just if you do like it, of course. Right, so we've got three serious, terrible red weeks here, which leads me to say a couple of things. 2 things could happen now. One, Dow could find a bottom and start to recover slowly. And in its recovery, it could stop the Nasdaq from selling. Why? Because then Dow is now signaling, don't worry, be happy, everything is fine. And we can talk about COVID, we can talk about the new strand found by South African scientists, not necessarily that it was found for the first time in South Africa. That's just neo-colonialism showing its ugly head again, right? It's a big difference, right? You got very good scientists in South Africa who have identified a new strain versus saying Africa is the bed hive of coronavirus, right? But, you know, neither here nor there, right? So this could be a nice place for this thing to start recovering. If it starts recovering, Nasdaq could go, okay, everything is good, no worry. What could that mean on Nasdaq is we could get a retest of that bearish engulfing pattern. I've told you before, you know that only means it's going to drop. So it might not be this week, but the other week. If on the weekly time frame, we need one good green candle to go back and retest the sell orders there, you're going to get this momentum this week. Good week into very bad 2 to 3 weeks. That's number one. Number two, Dow Jones could go, nah, bro, things are really bad. Let's keep falling. And then it could trigger the habitual nature of bearish engulfing patterns on Nasdaq to keep falling for 2 to 3 weeks, right? So those are like 2 scenarios, right? It's literally the trader who's paying attention who's going to have to make a decision. I can't tell you what to do. We can monitor it together throughout the whole week. I just want to remove all the drawings here. Now let's make a clean analysis of US30, right? So the Dow Jones occasionally will do a lot of this stuff, right? So this is what people mean by buy the dip, right? You can see that this is COVID. This is Corona, the first time, the very first time with COVID on the streets, February 2020, right? So with the biggest dip ever, best dip ever. And then after that, we had minor dips. So with this, then with this as the dip, and then with that as the dip, and then with this as the dip, and then every 2 weeks, everywhere. So look, this will happen on US30. Scenario analysis, very important. Look at this: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 good weeks. We're going to retrace for 3 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 good weeks. We're going to retrace for a month now, 4 weeks. 1, 2, 3, small break. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 2 weeks. And the pattern just repeats itself. So I'll say it again. You don't care about being right all the time. And all you want to do is change your life. You just want to make money consistently to a point where you can live off the markets. Open a second account, put enough capital in it to start trading like this. Please remember, if you're ill-disciplined, break a lot of rules, don't do it. You're going to lose that money. Don't do it. But if you're going to take a chance on me and my rules and the way I approach markets, and you're tired of just coming to war rooms for fun, and you actually want to see growth, here it is. There's literally from February 2020 to November 2021, you cannot show me a place where you bought a single dip and price executed you out. You can't. So all I'm saying is one buy in these little dips and a hold for 10 weeks. Let's start off with just 10 weeks. 10 weeks on 0.01. Leroy, 0.01, you can't get rid of a 0.01. You've never tried it before. You've never held long enough. 0.01 with capital ranging between 400 to 500 US dollars. You buy, you hold, you forget. It has to be the right buy. And you have to let price breathe. You have to let price move. We're looking at this thing on the weekly time frame, so it looks clean. On the daily time frame, on the H4 time frame, on the 1 hour time frame, the number of ups and downs that you will see on those charts will give you a heart attack. You have to set and forget. The forgetting part is extremely important, especially for an ill-disciplined mind or a mind still trying to learn the rules, right? But I'm done emphasizing this thing here, right? So this is all that's happening, in terms of volume. It looks scary when you look at normal candlesticks, but to me, it just looks like another normal dip. It looks like another normal dip right now, to me. right? And I'm happy to be corrected. So what I need this dip to do, and I don't think I can draw a clean trend line. Yeah, I don't think I can draw a clean trend line. So we're not going to draw a clean trend line. We're just going to draw some structure. All right. For me to take this fall seriously, for me to go, oh God, everything is going to crap now, I need price to break this area, right? And really fall. For me to take it seriously, I need price to if there are any demands in this area on US 30, all right? And so we'll see this week. I think we'll see Friday. Pray for us. We got excited. We bought a dream house, and then now it's time to move, and I hate moving. So we would like ideally to be out of here by tomorrow, and I'm postponing that. So maybe Tuesday or Wednesday. So maybe on Friday I'll have a new office set up, and then I can start filming again, right? But if on Friday I am ready to kind of like start getting back to work, we need to check up on this level. If this level holds, and we'll know this week that there's really nothing left to do now. If this level holds, then fine, all right? Then there's a recovery. But like I say to you guys, if price is to break this structure for me, then all the wheels have fallen out, right? So Dow Jones is already leading the fall. So we have to see what NASDAQ will do, right? So I know I haven't really directly answered the question on the Telegram group, or I think I have anyways, which is predominantly, you know, what's going on. It's difficult to buy when price is at an all-time high. What's the index for, you know, and it shows I don't trade a lot of SP500, XPS, XPY. What's the SP500? What's the tick? Okay, SPX. It is XPX, right? I wish there was no wonder chat. Right, so now look at this. There's SP500 in front of you, right? Just like NASDAQ, bearish engulfing pattern. So we have to see, will these charts follow the direction of US 30? And if they do, US 30 is about to get to a demand. So those who want to sell, this is what you want. You want this room. You always want enough room to make money. There's room there. There's room on NASDAQ for the downside. I will be here waiting for room to go back up. Why? Why do I want to go back up? By profile asset, when I look at this thing, all I see is dips. When I see dips, I see buying opportunities. There it is, SP500, dip, 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 dip. Time to buy. It's that simple for me, right? So I'll be waiting here to buy. Anyone wants to sell, go for it, but just make sure you buy with me in case selling goes wrong for you, right? I hope that's cool. I hope that's cool with everybody. I hope that's cool with everybody. I hope we can keep it pushing. I know NASDAQ is the popular one. So one more time on the daily time frame, look at NASDAQ. Look at NASDAQ when I use my volume candlesticks. Not a single red candle on site right now. Look at NASDAQ when you talk about buying the dips. You see where my yellows are? Most of my yellows buy the dips, or not. Some of them are momentum buys, but I never missed a dip. My yellow circles where I bought, I never missed dips. I don't mind seeing the red. I never miss dips. So here I am waiting for a dip into this area, right? But like I said, we'll see. Like, let's quickly catch up with some output news, guys. Remember, it's been a fun week for me. Zero working. So I really have no idea what's going on in the markets. You can give me like 30 seconds to just go through headlines. Very important exercise that you need to do by yourself as well. I do it in the London session. So I'm up at 4 a.m. meditation. Mr. Muggs, if you're watching, I'm going to do my trading meditation video for you guys. Thank you for that in the private group. I will answer that question. Right. So now, by 7 o'clock, all the kids, my firstborn has gone to school. I sit down and go through headlines to prepare myself for the London session. And I go through headlines again 30 minutes before the New York session, right? So it's like twice a day just to know what's going on, right? So oil, right? Whatever. Bank will maintain ample liquidity to support jobs. This is PPOMC, all right? Who cares? We don't really do a lot of talks about stocks in the channel, but next year we should. Who names the new COVID variant, right? USDJPY in strong reversal. I think we've got a buy order here that we're waiting for, so that'll be nice. US to impose travel restrictions on, whatever, South Africa, blah, 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 Canada closing borders. So we're getting that risk off sentiment. Important. Sentimental analysis. Markets are full-blown Monday. When markets open, we are full-blown risk off. What does risk off mean? If you guys remember, risk on, I'm an investor, I am risk on, I am risk positive. I want to put my money everywhere, put it here, put it there, put it there. There's nothing wrong in the world. Everything is a-okay. I can make money buying this asset, this asset, this asset. When I am risk off, things in the world are not okay. We're back to COVID variants. We're back to imposing travel restrictions. Canada is closing borders. Pharmaceutical industry is not looking at the new variant. If we become too risk off, I don't know if South Africa as a country is enough to trigger risk off sentiment, because simply the world right now is just targeting one country, South Africa, and then a couple, although that variant is present in about 8 other countries. So I'm just going to assume we're going to go risk off. And when we go risk off as an investor, smart money, as big investors, I change my direction of where I'm putting money, and I start to put more money in safe havens. All right, so my dollar will do well. My JPY should do okay. If I don't choose dollar as smart money as a collective, the top 10%, I will put it in gold, right? And now, remember, there's also Bitcoin and cryptos, but right now that's going through its own thing. So if we're risk off, and from what I'm starting to see, it's becoming a little bit intense with this new COVID variant, then you're going to expect to see Euro USD, all your risk-sensitive assets punished. They will fall. Euro USD, Pound USD, AUDJPY, NZDCHF, all those are risk-sensitive assets. So they're risk-sensitive in the sense that when we're risk on, they do well. When we're risk off, they do bad, right? But we should be all clear. We've been selling Euro USD for a very long time. AUD, USD, etc., etc., etc. All those trades went according to plan. AUDJPY, we've been in a long-term sell. So all that stuff, it was the pre-runner. All right, so Johnson & Johnson, okay, fine, whatever. Right, so a lot of South African dominating news here. Very, very silly. USD is weak today, blah, 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 virology stuff. Okay, there's not much. There's not much that happened on Friday except for Corona taking over every single headline. Right, which means there's nothing much to learn here. Let's go into chat, guys. We're wasting time. There's nothing much to learn. It was a COVID, fancy, right? So my favorite chart to start off with is DXY. The time now is 5:15. Let's see if we can make up for lost time, right? So DXY, I'm gonna go straight to the daily. Isn't this a beautiful chart, guys? You guys, if you've really been following, look at this stuff. Everything golden. Like DXY really proved, I think for me, this was probably the best chart of the year 2021 in terms of supply and demand fundamental analysis, man. It was so pretty, very easy to find setups, and it actually allowed us to gain a lot from the markets. Now, look at the daily demand on the volume candlesticks, right? First daily demand hit, second daily demand hit, right? Buying the dips, as I would like to say, second daily demand hit. This one is fresh area of value. Price has to come back, maybe, yes, no. I've got a trend line here, and I might need to start adjusting where I think my trend line is going to come back and get a second touch, right? If I draw my area of value correctly like this is becoming a good, strong reality, right? So if I want this is big. This is a big area of value, but it's a very big potential. Somewhere in here, something is going to happen. I don't know if the dollar is ready to fall yet, but if it is, it'll take a very strong supply to drive it all the way down. But all these 1, 2, 3, 4, 5, 6, 7, 8, 9. Have I taken profit? Have we taken profit on DXY? I don't remember closing any DXY buys. I think my take profit is just above, below the supply. Yeah, okay, so price turned before my take profit got hit. How unfortunate, right? But it's fine, it's fine. It's too late for me to close now. I'll have to hold and hope that markets come back up there. Right, to kick me out. I'm sure I've got to take profit just below this area here. Price was falling. Price got stuck in a short-term mitigation demand. Complicated 365 candles, as we like to call them in the academy. And then markets are bouncing off that on Friday. We shall see how markets continue on Monday. There is a very big, strong supply above. I think it's got weekly confluence, so be very careful about that. It's got weekly confluence. If it does, it's dangerous, right? Here we are, volume-based trading. Look at this imbalance. Pretty. Market inefficiencies got to get filled, so be very careful. And so what would happen is, you know, this COVID stuff could become a big deal in the next 2 weeks. If the vaccines can't cure it, people closing borders. You know, I'm just speculating here, but I have been right about this stuff for a very long time. So what could happen is you could get one more run of the dollar, right? As they're still trying to figure out stuff about this new strain, which I have no idea what it's called. And then we'll get all of this filled, right? So then markets could then plummet, right? If this is the case, if the dollar falls like this, then we should be buying gold. And Alvin, man, I remember on the private tele, there's so many things I need to come back to respond to. You get this you say something so important, and I hope you guys know I do read that stuff all the time. It's just that I do this, I teach, and blah blah blah. So I like it when you guys talk to each other. But I sit through the private group and read everything, and I respond when there's a need. But Alvin, you said something very powerful, and I hope your colleagues in the group remembered it carefully. Your reflection on gold, I think it was last week when I was traveling, or the week before, I can't remember. And you're like, it's important, or you realize by yourself that you can't just trade gold based on DXY. When I'm doing war rooms, I'll talk like that, right? We never trade a single asset based off correlation, period. We trade all assets based on supply and demand levels on that asset's chart, right? So I hope I'm remembering that conversation correctly. Eunice, shake my hand. Good to see you, man. Good to see you. Right, so this could happen. But if this does happen, if gold starts to fall like crazy, it means gold has become the chosen asset. Remember, gold is sitting on a governing demand that's been tested quite a bit. Excuse me, right? So please be mindful of this. If we break this supply, hallelujah, we continue up, but I'll be kicked out of the trade. I will no longer be in any DXY trades if we break this supply, because my take profit is just below. I don't have a sell order yet, and I'm really not inclined to sell the dollar right now, right? So remember, our thesis is a bullish dollar. Government has taken full shape and form. So I'm not inclined to sell because I don't know how long this sell would last, right? I really don't know. While we're talking about this, might as well quickly look at gold. Gold arrived at the 16th of June FOMC level at some point, I believe, yeah, and then dropped like it's hot, right? So that's what we thought was going to happen, and it did happen. This was one of my last classes that I gave you guys when we spoke about gold, and look at how it just tumbled down. Just brilliant, absolutely brilliant, right? And then gold naturally arrived here. Right, so gold is at a daily demand. I don't like this chart. I won't even lie to you, man. Gold is also one of those things you don't want to trade on a very tiny account. I don't know why, but a lot of people have this irrational lot sizing on gold, and they always pay the price, right? So there was a bullish engulfing pattern and a retest. So, you know, from a technical perspective, it would be potentially time to buy gold. From a technical perspective, it would be time to buy gold. Yeah, it would be. Right, so I'm basing it off that turn there, clean imbalance, and markets have hit, right? But you should have been in on Friday, unfortunately, right? That's kind of like the rough reality is on Friday, markets did come and sit, you know, only a cowboy would get in now, right? And there's nothing wrong with being a cowboy as long as you can handle shots being fired back at you. On the H4 time frame, markets are still trying to leave. On the H1 time frame, yeah, now you got your shooting star rejection, what patterns. Yeah, so now you see the problem with gold now is if you're to try and get in, you would literally be just playing the fool, because what's your risk reward ratio, right? Because for me, it seems my stop loss would have to be outside all of this. Okay, and maybe that's a bit dramatic, but definitely outside this. Definitely. My stop loss would definitely have to be outside that level, like that. And that means you're entering midnight or whenever markets open over here, right? And then your stop loss is over there, right? And then now what you're gunning for in gold. Guys, it's just for me, I'll never show up and not give you rule. I like rule-based trading, which means some trades we can know where the direction is going, but we can't take them. We know that we're going to get stopped here at some point. The imbalance is clean, it's valid. So this is a 1:2. And there are some traders who like 1:2. And if you're one of those traders, there's a 1:2 opportunity. I can't. I honestly cannot for the life of me take this trade. It's just not worth it. Right. And also, given the sentiment and clarity, until we have proper sentiment clarity that, look, man, COVID is here to screw us over. Everything's about to go to, you know, to crap. There's not much to do. Forex Factory, just to check what's going on during the week. CAD just said they're closing their borders. Powell is talking, right? CAD, dollar, Powell testifies to Congress, blah, blah, blah. ADP, oh, goodness gracious. We have NFP this week there. That's quite a big week for the markets. Let's make some money. Let's make some money. All right, cool. Let's hurry up and look at pairs then, because this looks like a lit week for the markets, right? So yeah, I don't know. Gold for me is not something I would want to trade, but if you do want to trade it, there is some type of upward movement calling you, some type of correction here, but be very careful where you put your stop loss. It has to be outside this area of value, and you could still get stopped out. If dollar makes a quick turnaround, markets could treat this as a quick retracement, or in 2 weeks from now, we could come back one day and be like, oh, wow, markets were creating a Talitha area, right? A PCP to the downside, right? You could get Brent on both ends. So just be very careful about that. But this is not really my cup of tea to trade. I will not be in any gold trade, right? So we looked at DXY, gold. Let's look at the euro. Falling as we expected, right? This is what we wanted to see for a very, very long time. We've been riding this euro thing. And this euro thing now has arrived at what I think could be a minor retracement. I don't think Euro USD is done falling. That's my humble opinion. I don't think Euro USD is done falling. All right. If your demand is this big area here, you probably paying the price right now. I don't think Euro USD is done falling. I would like to believe there's still about approximately 255 pips left in the fall, right? So for me, originally, before I had to cash out, because I only got out because of the challenge, right? Because I have to show something for the challenge. And I was starting to get a whole lot busier. But gold, Euro USD could come all the way down to 108, 109, 108, right? And for me, somewhere inside this area are our best buys. Our best buys for 2021 or very early 2022. This will be a good place to buy Euro USD and hold, right? But since then, we've been talking about this fall, and this is the main sell we took, and there have been many other ones down there, right? So this is a minor retracement in my humble opinion, based off what's going on here. Okay, minor retracement, but this minor retracement could open the door to a lot of opportunity, especially for someone like me. I would love to resell Euro USD, but just like how I was patient for those big sells that we took, I'm gonna have to wait for something that looks like this, right? So this is what I'm waiting for now. This is what I'm waiting for, and I'm pretty sure there'll be many supplies along the way trying to stop me. For example, on Friday, price exploded into a bearish engulfing pattern. I would not take this sell. Would I? I don't know. I don't trust it. Let's go to H4. Price is too parabolic, number one. Number two, you want to see a clean, even distribution of price as price comes to you, right? It could still hit there and fall, but right now on the H1 time frame, it's not looking nice. On H4, sorry, on H1, slightly better distribution, but price is way too parabolic, right? So much buy pressure, so much anger, right? And then all of a sudden, markets turn here on Euro USD. But when they do turn, 365 students, I hope you're watching out on all these traps. Like these are some BTM traders. You know, there's this random guy in our group who's, and God bless his soul, he's keeping the group active, sending chats, but BTM traders will call this a liquidity grab, right? So we appreciate the brother. Please don't take that the wrong way. Hey, Ivan, not a problem. But then I saw your message on Telegram, so I'm going to respond to that today, by the way. And I'll check on oil. Right, so this is some traders call it a liquidity grab, and that's fine, that's correct. It is a liquidity grab, but more importantly, 365 students, take note, they've removed the supply. If they remove a supply, you know what they want to do. In the short term, you know, you could expect something like this on Euro USD, so be very careful. Be very careful to jump on a sell here. Right, so I'm not really willing to move on this thing right now at the moment. I would love to get a very, very good place to bunker down. Just like every other sell place that we found, this is a very nice imbalance, so you could take a chance here. You really could. You could take a chance here as long as you're willing to risk money. All right, so now Euro USD is now in that arena of just little trust on the asset. The asset wants to retrace. We just don't know how long and how far. These buyers are very committed, right? So this could work out. Price could eventually enter here and then really drop, or price could overextend and break before dropping, or price could break, not drop, and overextend, right? So you have to be willing to take some type of calculated risk there. But if I'm not mistaken, I'm happy to put a pending order on the H4 time frame here on Euro USD. I'm happy to have something that looks like that, because my risk reward ratio will be perfect, and if something goes wrong, and then I'm just risking that much, right? But otherwise, I'd like to shoot it down back to the very beginning. But I'm taking this sale based on a lot of factors. I'm basing it on a lot of things. We have to be risk off this week. Dollar needs to kind of like, you know, get its act together and keep pumping up. Gold must just, you know, slow down a bit on the up and up, right? So if those three factors come together, I'm happy to take a sell. But if they don't come together and I don't like this parabolic movement up and lack of distribution, I might delete the pending order. This is literally dealer's choice. And if this doesn't work, you guys remember in the public Telegram group, we already have a pending order here. We already have this. I told you guys to put one here a long time ago when price was dropping like crazy. This is a very good place to wait as well, fundamentally. And by the time price comes here, we assume there'll be some type of distribution, right? So this pending order here is important, and this is what it looks like on the weekly. Right, so somewhere there. And you're probably thinking, but Leroy, there's no confluence, and that's very true. But if I draw a Fibonacci from swing low, swing high, I just want to see something. And my swing high being the last time I sold, which was here. You'll see it's within that 50% mark into that 6-to-1 golden ratio. So I would have a 2% risk here, and then everything is focused on this area here. So many lines on the chart, guys. Let me know if it's unclear. Let me know if it's unclear. I'll have a pending order here, the one that we spoke about on the H4 chart, but I'm definitely going to try and sell up there if this doesn't work out. I'll definitely want to sell up here. There's a lot of confluence that this is a better place to wait for price. Let the retracement happen. This is a rejection candle for some downside movement. So in the next 2 to 3 weeks, allow the retracement to happen. You can try your luck here. Make sure you've got a good take profit. If it does work, get out, because it won't work the second time. And then here is a good place to wait to really sell all the way up here. Very good place to wait to really sell. Okay, so that's Euro USD. I am not writing down these trade setups, and I'm going to regret that later on tonight when I'm trying to create a trading plan. Right, so I've got a notebook in front of me. I apologize. So I'm going to write here Euro USD, and we did kind of like see what to do with things like NASDAQ. I remember SP 500. I don't think I gave a signal for US 30. Right, so let's look at oil, since someone has really asked about oil. Right, crude oil. Pretty. Oh, wait a minute. This barely worked. And I didn't even set a pin in order, but that's interesting. Right, so there's something about oil here that I ignored. Can I just quickly find it? Are they fighting again? Does anyone know what's going on with oil? Iran says its plans to increase oil output. Why would you want to increase output? Right, so negotiations in Iran and US. I think we should, how far did oil get? Right, oil didn't get to that $87 mark. Interesting. Okay, so I had a 7 October buy here and I didn't buy again here. By chance. I just didn't set a pin in order by chance. Interesting. Right. I'm going to start off from a mayoral perspective. Just want to see a big picture perspective. I'm going to remove all these analysis now that they are not working. Oh, guys, please. This is, okay. So first of all, we are now being presented with an opportunity of a lifetime now. Well, not of a lifetime, but oil is coming back for a nice, solid, big buy. Right? Because whenever you get a big retreat, so we're a little late, but I don't think it's too late. We're a little late, but I don't think it's too late. Right, so somewhere here. All right, cool, cool. Strong run dip, strong run dip, strong run dip, strong run dip. Interesting. Right, so just so you know, $87 per barrel is Goldman Sachs's target for the end of year 2021. So Goldman Sachs, put out an article talking about how they believe that oil should get up there somehow, somewhere. Right, and so that's the target there in blue that I've marked out. That there's a strong belief, at least from very reputable financial institutions, that oil could be worth that much over time. Oh, by the end of 2021, not just like over time. So it was a good profit target in my 7 October buy. The problem is price turned just before, so I ended up manually closing price somewhere up here. Price just didn't ride the wave, all the way up, but we closed there. Now markets have taken a nice fat break, which is excellent. Oh my goodness gracious, how do I get this highlighter off the chart? Man, even you're the man. Thank you for bringing this chart to my attention. Let me write this down immediately. There's definitely a play in oil. We just need to find it, crude oil. And if you trade crude oil, just make sure you know what Brent oil looks like, because one of them will give you a better opportunity. Right, so naturally, I can see that markets are done retracing, right? Closing inside the golden ratio, just above the golden ratio. Markets entered nicely, hit that demand there. Markets are now shooting up. That's fine. We should have been triggered if we had pin in orders there. We should have been triggered if we had pin in orders there. Right, bullish engulfing pattern for the most part here now, but price has also done something weird and is now on the other side of a trend line. You'll notice that on the volume-based candlesticks, it makes sure that the wick closes on the right side of the trend line, right? That's very important, because if markets had closed just below, then that's a problem. But the wick doesn't matter. What matters is this is closing on the other side. But on a normal candlestick, we've got a different picture. Markets have closed on the other side. And so now we need to really make a strong decision around this, right? So markets have dropped into a demand. As far as I can tell, I'm going to go to the daily time frame now and see what actually happened, right? So bearish engulfing patterns. So all of a sudden, market started to make double tops, triple tops, and then fell. Bearish engulfing pattern, retest of the bearish engulfing pattern, which worked, and then markets dropped like crazy. All right. So markets are making higher lows and lower highs, essentially. If you look at it carefully, there's also a break of market structure. I'm just trying to figure out where to buy. I want to buy oil. There's that area there, which would be a good place to wait. Like that. I'll take my first risk there. All right, for oil. If that fails, then something weird or strange is going on in the world, right? Because this is literally all there is. And if you are looking for a profit target, be very careful not to just shoot for this, because now you've got structure in place. You've got structure somewhere here, which might force you to realign your distribution before moving up, right? So this will be a good target, right? And that's still a good risk reward ratio, I think. You guys need to learn the discipline of getting out when you've taken everything that you can from price. It's absolutely important, right? So like if you saw AUDJPY on Friday, when our take profit got hit, markets actually kept falling, right? So you would not have known markets were going to keep falling. All I knew was price was now at a daily demand. It was time to stop selling, right? But markets actually kept falling. But if you've taken the risk and said markets are going to keep falling, the markets don't keep falling, you'd have lost a lot of the profits you'd been holding, right? So just be very careful of that. This is almost 3:1 or 1:3. Good place to kind of like run away or exit or lock profits in the event markets get all the way to that area there, which is be a very close 1:5. Right. So for oil, I'm looking to buy or to just have a real buy here. Crude oil buy pending order. This is a very good place to wait for oil. All right. Brent oil. One of these charts is a primary mover. Stop. Look at Brent oil leading. That's a massive drop, massive eradication of some buyers there. Right, looks like on Brent oil, I was looking to almost selling this thing. I did not. The problem with me now is I'm starting to do that terrible habit of always being right about analysis, but only executing a portion of your trades. Be very careful of that. So I've clearly got a weekly week one supply one, and markets have dropped like crazy. But I can tell you right now, if you go through all my trading accounts, there's not a single oil trade that I'm in right now, that I'm selling oil or whatever, right? But this was a very beautiful clean sell to take, right? And so we're not in it, but those of you who know how we trade, supply and demand, peak supply, it's just a non-brainer. Right, now Brent oil is here, which is quite interesting. I would not want to buy there. I would not want to buy there. I'd want to buy somewhere down here. The problem with this down here is a doji candle, and so if you draw the whole thing, including the wick, you get something like this, which would then still trigger something like that. All right, but I'm pretty sure golden retracement here is done. Yep, golden retracement, and then markets are going back up. And it's just the same as crude oil. I'm going to go to the daily candlesticks. Price is sitting on that cusp of Talitha areas. You know, for some reason, I really would like to take a risk and wait till price gets down here. For some reason, I do want to be part of all of these oil trades, but I also want to catch the lowest buy. All right, so I would, for the life of me, have something like this. Okay, and then wait. Just wait for price to come to you. If it does come to you on Brent oil, this will be a very good buy trade, very good risk reward ratio. Fundamentally, all you have to do is just wait to be triggered. Markets have already done what they want to do to the area. Leave it out of it, right? Leave it completely out of it. Markets are falling. Right, so oil is going through a short-term retracement. Please don't think that that upward rally is over. These guys want $100 per barrel, and I guarantee you they're going to get it, right? So as long as, so CAD is also going to be doing terrible, right? So if you go to the CXY index, which is Canada, since we're leaving oil. Yeah, it is. Like Alvin, I would agree about the falling knife concept. That's why I don't want to sell. I don't want to catch it, but are we catching a falling knife by buying? I think that's what your point is. Let me just quickly look at the Canadian currency index, right? Look at that. So CXY is falling too, right? Just in line with what's going on. If markets breach this green box, we have big problems for CAD, which means the oil fall might actually be longer. All right, so let's just go back to crude oil, just so we make sure we're not trying to catch a fall in life, as Alvin has said, sorry. You know, it could be. You could be very right about this, sir. Because look, the prospects are this, and then that, and then this. Remember, this trend line has not yet been tested. The difference with me maybe, or with everyone, is I would still take this buy trade, and as soon as I could, lock profits, just in case I'm wrong. Just in case I'm wrong, and then markets do continue going up, I would hopefully hope that markets would at least give me a 3 to 4 day positive reaction to the buy, so I can break even or lock profits, so that when markets go up and they start to come down, they kick me out in profits, right? Which is better than nothing for the most part, right? But if markets do use this as a retest of their trend line, then this is where price should be heading long term, right? First here, then here, then eventually there. And like, this is an interesting development, you know, in the world of oil right now, because everybody's focus was on that $87 and then moving to $100. Thanks a lot for bringing that up there, Alvin. Right, cool. So that's oil. And Brent, oil, Nasdaq. All right, cool. We've done a couple of assets, guys. Done a couple of assets. Now we've done gold as well, but I didn't see anything that I want to trade in gold. I told you guys I would avoid gold personally for me. Silver has been annoying, all right, with this crazy range or this clean sell all the way down there. But this was a long time ago. I mean, I haven't done anything in silver in a very long time. But that was a very beautiful sell, right? We need to stop somewhere here. And then markets have ranged back up there, right? So there's nothing I can do when it comes to silver. I don't think I want to move money around or take any type of trade on silver right now. This sell area could work again. It's a possibility, but I'm not interested right now in taking the risk, right? And markets also created a new supply there. Like that. All right, so that's silver. Not much to do, unless if you want to do something in silver, then you are probably going to try and start picking a bottom. I'm going to start trying to guess where price will stop dropping according to your analysis and all that kind of stuff. And that can get very dangerous. What we want really is for silver to break this white line, create a break of market structure, number one. Number two, when it goes down, we want it to go down so we can really buy it here. This is a good place to come wait for silver. Don't know when it will get there. This is where you want to buy everything silver, physical silver, the silver coins, silver EFTs, all that kind of stuff. Buy silver here. Excuse me. Okay, that's silver done. Palladium. Also been a very long time. Right, so Palladium is falling. Guys, when gold moves, Palladium moves. Gold and Palladium, like this. And Palladium pays very well per ounce or per point or per pip. All right. So when gold moves, Palladium moves. It's really worth your time, you know, checking out this chart, not treating it like a strange chart. Now, markets move up and down by profile asset, blah, blah, blah. And then every time there's like a dip to the downside, here, for example, always very sharp and deep and sweet, like very quick 3 weeks, markets will take forever to recover. And when they do, they'll do the new supply and drop even further, right? So just be very mindful of that. That markets are getting to that place where you either have to buy or you either have to stop selling. And it's very difficult to know if you're right or wrong right now, all right? Because markets are consistently moving. But here is nice area of value right there. And you can see prices entered here, right? So Palladium, for me, feels like a do nothing. Feels like it would just be too rash to buy when my big picture, my consolidation pictures, or perspective rather, my big picture on the market is that, you know, the big boys have been covering any type of losses, long-term or short-term losses on Palladium, right? Palladium, while all of this was happening, I'm pretty sure they were hedged positions during this entire drop. So I don't know if there's any fruit to long-term buying right now, because this could happen. Or this, like that, right? So it's really up to how high price wants to go up before what I think could be a long-term inevitable crash in Palladium. Not crash, but like some type of going down, right? So just watch out for that for Palladium. And then lastly, my favorite money maker, cotton. No, cotton will waste a lot of time. Let's just keep it moving. Right, so let's go to Swiss Franc JPY. What's going on here? Okay, I see. All right, so we got triggered here, you know, and I wanted to post this on the group to say I'm gonna do nothing, but I don't like it. Just so we're clear. And I think I did. I think we did talk as briefly about JPY on the public group. Maybe I'm now mistaken my public group for the senior traders lounge, but we definitely need to be careful. Yeah. Okay. No, I found it. I'm literally, yeah, I'm not crazy. So what I do is if trades look risky, I will try to announce as soon as I get notified that I'm in a trade. Obviously, I'll try and let you guys know what my assessment is. Some trades we forecast them way into the future, and markets change their patterns, right? So I try to be very honest and authentic about that stuff. So those of you who got out, it's okay if you got out, because I told you to. I said, when did I post this up? I don't remember, but it's not written the date. I say, look, I think Pound JPY, I think as announced earlier in both groups, this is the last warning. If you took the CHFJPY, it's given a good 40 pip run, time to get out. I do not trust the buy. It could run, but be safe, keep the profits, blah, 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 blah. Right, so my point is I did warn you about this, right? And that's because I saw a lot of bearish pressure on top of that order block. Right, but that being said, I'm still in it. Right, so this was a 40 pip run up here, and then it hit a wall. This is a good place to wait. Look at this, end of a bearish structure, blah, 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 blah. This is a good place to wait. And I'm pretty sure when markets open tomorrow, I'm going to exit. I'm going to try and exit this trade clean. So that is make a $0, so break even, right? So my stop loss is still out here, but I'm sure markets might edge a little bit to the upside for a couple of hours, and I'm going to break even. I don't see this buy going anywhere. What I do see, however, is the story of a lot of sell pressure building up, right? So if there's a lot of sell pressure building up, we only want to buy it down here. So buy 2 is our main buy, and we want to buy all the way back there. Okay, so be very careful. Pound JPY, Swiss Franc JPY, I would suggest you let it fall, right? If there's resistance here, yeah, sure, I'll make a little bit of money. And those of you who are still holding this buy, that's perfectly fine. But I am almost open to this not working out. Buy 1 at least, right? So buy 2 stands. And if you remember, there's a lot of reasoning behind this stuff. Prices hit supply coming down. It's weekly time frame. This is the only confluence there is. All right, so price won't actually just stay there forever. It might need to complete a cycle, come back down into buy 2, then we ride it back up, right? Just like the trading plan on inside the remote course, right? So Swiss Franc JPY, not much to do right now, except for the fact that we're waiting for a buy to be triggered. Euro Swiss Franc. The amount of money made on this trade without us was absolutely disgusting. And I say us, I'm talking about those of you in the challenge, right? So via scenario analysis, I took 1, 2, and then I just stopped taking trades. But this was beautiful. But I still would love to sell up there. Would love to sell up here, right? And it seems like markets have decided this is the current leg that they're in is a downward leg, a crazy downward leg, right? Crazy, crazy. Markets removing demands, consistently red. And this is powerful because markets have now arrived at a governing demand, right? So where we want to sell, it will be the first time when prices coming from strong buy orders, markets get tested, right? But right now, as far as I can tell, markets have arrived finally at a governing demand, right? So markets either want to go all the way down and create a new low, or prices about to go back up. So be very careful with Euro Swiss Franc. Not much to do right now except to wait. EURCAD. Yes, you did. Thank you. Yeah, exactly. Okay, thanks. See, at least I like it when someone actually remembers his instructions, because then, you know, like forex gurus or whatever, they just like talking and lying. It's easy to be right in hindsight. So I remember addressing this, and someone has confirmed that I did do it. So that's fantastic, right? So this is it. We've got this situation here that I'm not entirely sure. I wouldn't want to buy because of how low this is, right? So you really don't know how deep devil's hell is here, right? So some senior traders are buying this, by the way, just so you, from what I saw on the senior trader group, they have something that looks like this. And they believe that this area here will do a good job of holding orders back up. Right, so they don't have a stop loss this wide. Please don't get it wrong. This is the area of value, stop loss just outside their area of value, right? So this will be crazy. This is literally a long way down, right? So if you're of the brave-hearted, and then you're slowly but surely starting to look for buy setups. I don't think it's a good idea, but that's just my personal opinion. Right, I don't think it's a good idea to start buying Euro Swiss Franc right now, even though we want to sell at the top, which means we want price to come up to us. We are not yet ready to handle this type of buy. This type of buy is dangerous, all right? Very dangerous, right? So there was some collective ring like that, okay? 1, 2, 3, collective ring to the upside, right? And then now markets on the other side of this equation are trying to test all of this without, you know, understanding it from this, because this is an extended leg to the downside and price is really bleeding here. We need some type of correction, right? We need something that looks like this, and then like that, and then eventually like that. And then if it wants to continue bleeding, it can, right? But then the problem with the daily time frame is the daily time frame is presented us with a plethora of sell setups. I mean, every time you get a bearish engulfing pattern, you get a retest, bearish engulfing pattern, you get a retest, bearish engulfing pattern. That's just literally in the last week alone, all right? So markets have been like quite focused on falling on Euro Swiss Franc. So just be careful. If you're buying, it's in the gray, right? CADJPY, I think we've got a pending order there as well. Yep, I remember seeing this being triggered. I don't feel comfortable anymore, but right? And it actually reminds me of AUDJPY, because if you look at AUDJPY, you're going to get the exact same feeling. Right, so imagine this. So imagine we were right about all these cells, and we were, by the way, AUDJPY, CADJPY, SwissJPY. We were right about them, because at some point I said, look, man, all the JPY pairs are doing the same thing, blah, 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 blah. So we're right about them. Here's risk management and trading in clusters, why it's important. Because we might be about to be wrong with 3 or 4 trades, all JPY in the buys. All right. So what I'm saying is this CADJPY buy one might fail. because of everything that happened. Remember, when I'm forecasting this stuff, I don't know if there's going to be a new COVID variant that's going to trigger risk of sentiment. I don't know that stuff. I'm just telling you that this is where all the money is from what I can tell. Get ready. I'm not doing anything about this daily buy area right now. What I will do, because I'm already in it and I don't want to close, because if I close, I'm going to close at like maybe a $10 loss or whatever, is I'm going to wait to see how price reacts here. As soon as price gets up here and clears me, what does clearing me mean? It means on the H4 time frame, markets actually give me one demand. I just need one or two demands on the way up. So I'll repeat that. 365 students, listen very carefully, because I will be moving houses. So I'll be checking markets at night before I pass out, and I'll be managing pending orders that have been triggered. And this is one of them. I'm saying if I get an H4 demand on its way up here, if I'm desperate for clearance, I might get two H1 demands, right? Right now, it's not looking good. But if I do happen to get an H4 demand, even somewhere here, where markets, and demand has to be valid, must meet all the rules, blah, 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 and I get something like that, a valid clearance of a demand, then I'll take my stop loss and break even. That way I am protected in case something goes wrong. H4 is always better than H1 because H1 demands break easier. Right. So, but for now, I can tell you now that we're all, those of you who've got access to the remote course, we're definitely in the fire here with CADJPY, and it's just patience, right? If you're risking properly across the board, if this loss should not make a difference, right? So you made 1:13 on AUDJPY. You made 1:18 on EURUSD if you're taking all these trades with me, right? So 1:1 on CADJPY will not make a difference on your portfolio. But instead of getting out in a panic, might as well just break even so you don't lose any money on the trades. You have to wait a bit, right? But if this works out, then that'll be fantastically interesting. More money. I'm pretty sure I've got a bigger lot size on my daily demand on buy two, as I explained in the in the trading document. I think or if I didn't explain, the lower buy is the better buy. The lower buy always the better buy, right? So I'll put some serious cash here, right? So let's see how this goes. CADJPY, we're in it, right? So if you're not in it, then yeah, you're more than welcome to buy, knowing that there's a lot of risk behind this one trade, all right? Because buy now would mean you're actually buying a little bit lower than where I bought. I bought on the white line, right? And then we'll see. We might need to start adjusting TPs or breaking even, right? But this is a good place for price to get back to. Remember, CAD is suffering, oil is retracing, CAD is falling. If oil is falling, CAD is falling. So this is not a surprise that on Friday, with coronavirus, CAD closing borders, oil falling, like risky assets, not a surprise. And remember, with CAD, right, the temptation is real. Look at this week for CAD. The governor is speaking for CAD. Then we're going to get the gross domestic product on a month-to-month for CAD, and it's going to be crap. The month-to-month is going to be crap. If oil started to retrace 2-3 weeks ago, that data is going to be factored in. It's going to be crap, right? And then also for CAD, every time there's NFP, there's something to do with CAD. There's employment change for CAD on Friday. Unemployment is like the CAD NFP, right? So it's a very, very big week for CAD. And so we will experience a lot of volatility here, all right? So steady your horse. And if you take the L, take the L. Whatever you lose here, you'll make it. Between the distance between this buy, just from here to this previous entry, you would have covered what you lost if you're using proper risk management. And all you have to do is to hold this buy till kingdom come, right? So CAD is going through a lot. We know this. So I'm mentally preparing you. All right. So CADJPY, again, we do nothing because we're already in it. We are already in it. I hope that makes sense to a lot of you. We are already in these trades. These are part of our planned trades, right? But if you're not, this is a good time to buy because at least you're buying a little bit lower, stop loss outside the daily area of value. And it is a C-class trade, which means be very risk averse. Be very aware that you could lose a lot of your money. Okay. See, time is no longer on our side. I'm straight after this, I'm doing another video, the spreadsheet video I promised, by the way, straight after this one. I want to get these things out. You'll probably watch it tomorrow, so I'll make sure it uploads on YouTube, or I'll set it for tomorrow, 6 p.m. tomorrow night, in case people have to work during the day. So a powerful, important video. I've put together a lot of data for you guys over the weekend. It's just that this coming week, I will be ice cold quiet while I sort my life out. Right, so CADJPY done. Not much to do. Let's keep it moving. AUDJPY, we took profits, but I think there was some triggered buys for me here. So I'll see how that goes. All right. I just don't know if these buys were actually in the remote course for AUDJPY. I can't tell when I'm looking at this chart, but I know for a fact I had a pending order here that's running as we speak, right? And markets have really arrived at a very good place, right? Upward trend line inside a demand, perfect hit. They ignored this and targeted that, which is perfectly fine. That makes a lot of sense to me. Markets always go for a lower demand. Perfect, right? So markets have put it up, right? So got triggered out of the sell, got triggered into a buy. I would have more faith in this buy, just so you know. Always at the base of the trend line is broken, right? But we'll see how long that lasts. Again, AUDJPY with this buy, same thing as CADJPY. Once I get a base and a clear on the H4 time frame, or two clearings on H1, I will break even, right? So if markets come to this H1 supply and room to breathe, I know markets are going to kick me out. But I'd far much rather get kicked out, losing zero, than losing a single dollar, right? A single dollar. Okay, so NZD Swiss Franc, let's look at that next. Oh, sorry, EURCAD first. I think we want to sell this thing, and this thing has finally started coming back up, right? So I've been waiting to sell there. I have no intentions of buying anywhere right now. As you can see, markets are buying, people get excited, but what people forget is markets broke structure to the downside, broke a demand. That's a big deal, right? This is like, it's not a small thing. It's a big freaking deal. Look at this area of value here. Look at the imbalance, right? It's like a massive bullish engulfment. Like, it's a big deal that markets are buying now, but they've removed buyers from this area. They're not just buying, they've removed buyers from the area, right? So on the weekly time frame, we now have a swing high, swing low. And you can see your golden ratio is right there. On the daily time frame, we know exactly what we need to do. Right, on the daily time frame, we now know exactly what we need to do. Right, so I'll be waiting for this to happen, and as I have for a very long time. Right, so you got almost 1:4. But an almost 1:4. This will be a good place to get out on this chart. Right, will EURCAD retest and all that stuff? I don't know, right? This is going against the weak CAD, it's a possibility, or markets won't even bother doing that, right? Markets might just do this. But for me, this looks like it's too late to buy, right? But markets have announced that they're going up no matter what, right? Look at this. Breaking market structure to the upside. Markets want to go up, and they're more than welcome to. One wants to take a risk, and it's a cowboy. If price does come back down here first, like that, then yeah, you can take the buy. All right, but I won't be in any buys. My mind is just right now fixated on selling EURCAD, and I want to keep it simple like that. USDCAD, unfair for the CAD. Like I said, it's going through a lot, strong dollar, blah blah blah. Right, back to that main sell point that we took together earlier on during the year, September, right? When I said sell EURUSD, it was a good 1 hour supply, so it looked like something like that, right? Inside this daily supply. Markets have come back here. I don't want to buy here or buy there. I don't like these things. Generally speaking, it's never a good idea. So I'll wait here. This is the first available area of value that gives me that unfilled order, but also gives me that fresh approach, fresh touch. So I'd very much be happy to to buy here. So I'm waiting here on USDCAD. That could be a new signal. That's not on any of my current pending order plans. So this is going to be in addition to the cluster. I want to take this trade here. This is hanging a lot on a strong dollar week CAD, which is kind of like what we have right now anyways. So the question is, how will price deal with this supply? These are all wicks in here. It was a very strong supply. Price tumbled for a very long time, blah, 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 blah. We are on the other side of a trend line. Okay, we've got that FOMC level that we never saw light of day of yet. Markets never forget, right? So just be mindful of that. USDCAD, I'm done. I'm flying. I'm flying. Next one, Nzd Swiss Franc. Just want to cover as many assets. Risk little. Yeah, we got Brent here. Better buy. Triggered. Right. So we hold that. Not much to do. I mean, I remember writing a note telling you guys why it risk little, blah, 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 blah. I did a 1% there. I saw that get hit on Thursday or Wednesday. Not a problem. Now we wait. So not much to do here. My better buy has been triggered. There's nothing I can do, personally speaking. If you're in this trade, hold and wait. What you want to do as a trader, if you are not like me or you are scared, the reason why some of you guys can't hold money for long, trades for long, is because you keep them running risk-wise for long. So this is clearly a supply. This is obvious that markets are going to bamboozle you somewhere here. You can see my target is there. And when I have targets like this, it's for me is to say, come hook or crook, right? I know this is going to happen. I don't care. I want to ride the wave. But if you are scared of such things, again, H4 time frame, as soon as you get a demand, whatever, break even. Of course, that's going to affect your win rate, because what's going to happen is the more times you quickly break even out of fear, and it's sad that I'm even teaching you this, you're going to start to notice that you might get in a cluster of 25 losses, 6 wins, and 5 plus 6 is 11, and 9 break evens, right? It's kind of like crazy. You're losing less, which is good, but you're not making as much as you should. Right, so I like to just let price breathe for a very long time. Like a daily demand is a good one, but an H4 demand for those of you starting out is a good idea. But just remember that when price gets here, there's going to be trouble in paradise. Okay, when price gets here, there's going to be trouble in paradise. So those of you buckle up for this area or get out, right? So this would be like almost 1:3, almost. But remember, as the moment you break even, then it's all yours, right? There's no risk to it, right? It's just less than 1:3 because you're still risking money. But the moment you break even, 0 risk. But Nzd Swiss Franc, that's what we have going on. I'm definitely happy with the better buy. This was a guaranteed, not a guaranteed, but it was always, I did say risk little. It just didn't look like markets were going to correspond. And by the way, we were in profits for a while. It's just that I forgot to tell people to exit or close or whatever. So I never closed profits. I actually lost the profits when price turned, wasn't paying attention to price, and I got stopped out. But it's neither here nor there. It's not really a big trade. This is the bigger buy. All right. And I think in phase 2, we should just keep better buys. Just that human beings don't have the patience to wait for the stuff. So you keep them interested here. Now they're in, and then you tell them, okay, take profits now and close. If I'm watching the chart, then someone has made $40, $50 and they think they're trading. The real trade is down here. So yeah, just if you're triggered, hold. If you want to get in, well, you know, choose for yourself if that's a good idea. Pound Swiss Franc. I'm not even going through the massive overview because of time, right? This thing is still falling. This thing is still falling. Oh my goodness. What a missed entry. Is anyone in Pound Swiss Franc? I'm talking recently. I mean, I know we had earlier sales, but I'm no longer in them. Okay, so here's to hoping and wishing. Here's to hoping and wishing. I don't know, because remember, we bought this thing a while back, and then I told you guys when to get out, blah, blah, blah. You guys were scared of it, yada, 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 yada. And rightfully so. And then once it broke this thing here, it went up again. But I thought I would sell. I really thought I would sell up here. And I can see now it's not coming back to me. So God willing, now that we're out of those buys, that if we could come catch it here, that would be nice. Right, but be very careful. Be very careful. It's not a clean supply. And by that, I mean the peak or the top of that supply is actually missing, right? I don't want to force anything here. There's a market turn, but it's not pretty. And it's not only just not pretty, you don't have an imbalance. Okay, you don't have an imbalance. If I've told you before, you know what I'm talking about. There's nothing here. So when you look at that bearish engulfing pattern, trust it a little bit. Do not trust it wholeheartedly. Trust it a little bit, which might require you to have an order area of value that's this big. Remember, the buy orders we took, markets did a good job of glass effect, really digging deep to a point where it removed them. There are no buyers left. I can guarantee that, right? So markets are literally sitting at the base of where buyers used to be. Now, if you take this sell, because of how big this area of value needs to be at a trust basis, be very careful, because you are going to struggle to make a lot of profits around. There's a speedy bump there, which will actually mean if you're to exit by the speed bump here, it would mean you're in this trade for 1,36. So it's too late now. That's why I wanted to sell up there. Right. So I'm deleting this. I am not selling here. I repeat, I am not selling pound Swiss franc there. I just don't like the setup. It actually could work out great. I don't. If you find a setup like this, by the way, let me just teach you guys something. I'm sure you guys know this. 365 you know this. The power of multiple time frame analysis is basically you can always take a trade. You just need to adjust your R&R by adjusting your time frame, right? So if I go to H4, it's just that I'm just a daily guy because I wanna correct swing, right? If you come here, see that there? Perfect. Right, let's draw a couple of Fibonacci's just to double confirm something. Right, so we're gonna do a quick version of the first part of a scenario analysis, which is to see how the asset reacts to retracement. So swing high, swing low as quickly as possible. Right, and then what I do is you'll see these yellow marks on my chart to say it worked. That's a golden ratio retracement, it worked. Then what I'm gonna do now is I'm gonna simply draw the next Fibonacci. I'm just gonna adjust the Fib instead of redrawing it. Right, so the next swing high is here and the next swing low is there. See that there? PCP level, right? Remember 0.236, 0.386 are all PCPs. And what did it create? Created a new supply. All right, cool. So it is definitely a big seller. All right, now we move into the next swing low, which is over there. And the next swing high will be the last spot that we just highlighted, right? And if we drag this across, you will notice without the need for an order block, price came back, right? So I'm not crazy, right? So I'm building this. I'm making sure I know what to expect from the asset based on its habitual nature to come back to that Fib level. Now that I've got that there, I need to adjust my levels. I know I'm going too quick. Please just rewatch this. Just that we've done almost 2 hours already, right? So I'm gonna come here, swing high, and now I need a swing low. I need a new swing low because this is not yet a swing low. Remember, a swing low is when price starts to breathe. So now let's play again. Let's say Monday is swing low day because we've got a bearish engulfing pattern on the daily time frame, right? And we know that price might need to come back up. Oh, did we broke you? Okay, you guys broke even. Alvin, yeah. So I did tell you guys to break even. That's good on the buy. That's fantastic, man. I remember joking around and leaving it to breed an open. And I think Alan was like, he had trust issues, or maybe it wasn't Alan. I don't remember who said that, but it was a very good trade. Right. So look at this. If Monday gives us this. So if price starts to kind of like we just need 2-3 candles for a swing low. 2 green candles tomorrow. What we'll then have is this being confirmed as the new fib level. You see that? There. So because of that, I would take the sell. You saw our AUDJPY was on the H1 time frame. That's because there was no time to wait for the daily. All right. Otherwise, we're never going to get those clean entries. Right. So I'll sell here. I'll wait to sell here. Beautiful imbalance. And then this actually resolves my risk to reward ratio. Knowing me, I would have a wide stop loss though still, which is what I assume we're trying to avoid. Let me just see the actual target. All right, so price is playing here. Right, so let's make this a new target. Let's say price comes all the way down there. Scenario-wise, now and then let's just find a confluence target on the daily, because the daily will be obviously stronger. All right, so that's where price is right now, and that's below this order block, so that won't work. So then the next target will be down there. The next target should be down there. All right, so there's a better order block there. So that's the next target. So that's the H4 entry, and that's the next target. Now, the last thing I want to do is to safeguard being stopped out. Safeguard being stopped out in terms of, so essentially to be safe, this is what I'm avoiding, but this is my temptation. I want my stop loss to cover that high there, the swing high, this high. And that would then reduplicate that big order block. So it's going to have to be a high risk trade if we're going to get the risk reward ratio that we want. It's going to have to be a high risk trade. What I normally do in positions is I'll have 2 orders, 2 sell orders. I'll show you. Order 1 is this one. This one, I go in smaller lot size because it is swallowing a bigger area of value. It's 1:3. Take it. Right, so I'll go in. So let's say in my current cluster, let me just open my spreadsheet. My current cluster right now, I'll tell you everything right now. I'll tell you everything I'm doing in this account that I'm going through. Let me share it. But don't worry, straight after this war room, I'm doing a video on this stuff. I just don't want to include it in the war room because you guys will lose it. You won't watch the whole video or whatever. Right, so I have to risk about 66 to the magic number is $63 per trade for what there's a camera right in the cluster. That's the magic number, and here it is here. So if I go by my own previous notes detailing the plan, I'm just gonna have about $63 per trade, which will work out to about 0.15 lots, but depends on the asset. So you have to use a pip calculator. But let's just say on average, I'm going at 0.15. 0.15. All right, that's number 1. If that's the case, then on this particular trade, because I need a new cluster of trades to keep the account growing, I would do this at half. So I'd go 0.7 sell, and then I would have a second pending order. As long as it meets my risk management rules, I'll have a second pending order here. Where is it? There. And in my second pending order, this would be probably double. Do you see what I mean? My entry point and my stop loss for the second one will be something like this. And here I'd go 0.30 because $63 for me is 0.15 from what I want to risk. So I've got a $25,000 account, but I can only lose 5% of that account, which is 1,250. I'm trading in a cluster of 20 trades. 1,250, which is 5% of the account, divided by 20 trades means I only get to lose about $63 per trade before I stop trading and quit supply and demand. Right? So those are kind of like how disciplined the rules are. In that process, my target is growing my account by 8%. So every time my account goes up by $2,000, I do a turnover of clusters. right? So because of that, I could take 0.7 here, which would be entry point here, stop loss there. And then I could double it up here if I'm very sure, because that would increase my risk to reward ratio greatly if I am absolutely sure. And there's a way to safeguard this. So if you're trading this thing very focused, you can imagine now risk to reward ratio is 1:7. So if you're trading in focus and you're watching the charts, like if you're a full-time trader, it's easier to do because number one, instead of putting a pending order here of 0.30, all I could do is watch price. And all I'm waiting for is a rejection. If I get a rejection candle somewhere inside here, I now know that my supply has been activated. Once I get a rejection, instead of a sell limit, I do a sell stop, right? So I put a sell stop here so that when price falls, it triggers me versus price triggering me on the way up. I hope that made sense, right? So that's what I'm doing with pound Swiss franc. It's a very good trade. It's well worth the risks. It's well worth the risk. Okay, it's well worth the risk. I'm worried about time, man. I'm worried about time. Right, let's do 3 more charts, then we call it quits. It's been a beautiful 2 hours with you guys, but remember, I still need to film a video for you guys that will benefit you 10 times more than just signals, right? Pound JPY, I don't think I've been triggered in any of these trades yet. So let's see. Yeah, markets just turned right before, and I thought it was gonna do the Euro USD thing where it turned right before, then came back. It hasn't come back, and I am not yet in. My commitment to the trade hasn't changed much, but it's a pity that it's gone down this way now because there's no demand here, right? This is the only real demand. So if this demand doesn't turn price, so what you want now is some type of distribution here, and then it will come down like that. And I have no choice but to wait for it. Nothing to do here but to wait. So I want to sell up there. All right. But now that this demand, remember, this demand was in the way when we forecasted. So when we had the war room or whatever, this is what price looked like. All right. So obviously, our risk to reward ratio was calculating that price was going to turn there. Now that markets are there without triggering us, it's a blessing because what we want price to do before coming to trigger us is to, where's the playback bar? Okay, there's the playback bar. What we want markets to do now before coming to trigger us is to simply break the demand, which it has. Markets have broken the demand. That's why I removed it. If you look very carefully, look at that. It has. It's opened the gate, right? I don't want to say John Bullock gate, but it really has happened, right? So what the next thing that we want to see now, because again, I don't see a demand here. I see nothing valid. I have this red area here because we just want to see it psychologically. But when we see red, it does not mean there is demand. So that means now my profit target has increased quite a bit, right? So we're coming back all the way down there. But markets have to come collect us before coming down there. There's nothing there on the mayoral time frame. This could be a very good swing. Oh goodness gracious, this could be a very good swing. What do we do? This could be a very good swing. So this could in reality be area of competition. All right. Yeah, damn it, man. Right, so let me explain. So markets did come to this area of value. It's just that I did not have the right area of competition. That's problem number one. And I would never draw my area of value to include that deal. I was already too big because I was already risking this much. All right, the order flows in this area are still intact, but markets have already come back for an area of competition, right? Let's go to the Kinihashi. Yeah, bloody hell, man, we missed it by a thread, right? So it now we must be very careful. I'm still good for the trade. But the reason why I wanted to double check that is because I wanted to put 2 pending orders here, but now I'm hesitant, right? So ideally, out of 2 pending orders here in this area there, pending order number 1, take profit here. Okay, that's simple. Pending order number 1, take profit there. Pending order number 2, break even and leave it alone. Break even and leave it alone. Why? If you look at the mayoral time frame, after markets are done dancing at this level, there is nothing, absolutely nothing to catch price. Now, markets are not going to be fair. They're never going to give us the easy sell-off. You can see where we want to sell right now is a problem, right? You see on the yellow is where we want to sell. But you can see on the weekly time frame, markets have already started giving off a second bearish engulfing pattern, which means markets could retest just here, which would mean that this was indeed an area of competition. So markets came for a fresh touch, if you know what that means here, right? And then created a bearish engulfing pattern on the daily and came back to retest it. We missed that too. And then markets dropped. I missed all of that. And as they dropped, gave us a BOS, break of market structure, and continued falling. Now, as much as this sounds interesting and nice, we are missing out on a whole lot of money. It's a little bit annoying. So again, it's well worth the risk to target this area. I'm going to have 2 pending orders on Pound JPY. Pound JPY is probably my worst asset. Combined this year, I might have lost about $835 US to Pound JPY. I know there was the 507 loss at some time earlier on during the year. Then there was a second one, also for $300 US. So it wasn't too bad, but still, I don't really have repeat losers on assets except for Pound JPY. So I try to avoid trading it, but again, I'm excited about the opportunity in front of us here, right? So look, 2 pending orders, take profit here to grow the account. The second one, break even, emotionally detach from that particular trade so that you have this, if you're lucky. If me and you are lucky, we'll have this up until next year. All of this needs to be filled up until somewhere here. And this is the trade I have been trying to get on the whole year. The whole year when I sold here the first time when I got Brent, I wanted price to come there and da-da-da-da. And markets have been playing. And now if you look very carefully, this is actually quite interesting. Again, you get this formation with a lot of JPY pairs, slowly but surely. Markets be looking to play the terrible head and shoulders games, right? So we still, that's why I'm saying take profit here, because we're still going to be in this zone or this area for a very long time. And then the next problem to deal with is we need to locate a very good supply here. So you see this BOS line, this white line that I just drew. If you do an MTA, you're going to find a supply somewhere, or they're going to create one. There we go. I told you. If you do an MTA, you'll always find the supply that created the BOS. Right. So look at this on the H4 time frame. Look what markets are doing. 365 candle, bearish engulfing, coming to retest on Friday. So what do you think is going to happen on Monday? Right. Scenario 1, markets climb up a little bit just to shoot back down and leave without us. Scenario 2, they're slightly unlikely because of what's going on. This line here, this white line, is at the supply of the weekly bearish engulfing pattern. I repeat, this white line, I'll draw it again. This white line here covers, let's remove the dot. This white line literally marks the weekly supply, weekly chart. You see that there? You guys see this? I mean, it's a war room, so it's fast paced, but I trust if I've taught you, you're good. See this there? That white line is talking about that now. That changes the game. And is the reason why my mind will just freeze when it sees Pound JPY. Right, so this is a possibility now on the chart. So I will go with the principles of sell high, buy low, and ignore this. But it's probably going to cost me a lot of emotional pain. Right, and I'll still stack up some cells there. Because most of the time, when you finally think you've figured Pound JPY and you think, you know what, this is the sell, it goes up first and then decides to sell higher without you. right? Happened there, done, right? Most of the time, when you absolutely are sure that this is the time to start selling JPY, it'll give you a couple of one fresh touch, barely a retest, and break out to the upside, and then sell a whole lot higher. So I'm hoping, I really am hoping that instead of faking out retail traders here, it does that, burns them, and then comes back up here. But if it does come back up here, there will be 2 pending orders waiting for it. I don't know how long it will take, but I'll have 2 pending orders here. A take profit target that will adjust based on when I get triggered, and one where I just want to break even and hold up until we get down there. It's pound JPY. Right, next one, pound AUD. Just trying to quickly tick this list because I have to sit with this chart again later on tonight. Pound AUD on the daily. What's cooking? Good looking. Ooh, that's aggressive. Thank God we're not in that trade. Are we in this trade? I'm not in this trade. Buy. Okay, there was no confluence. Okay. Risky assets, guys. So you see what all of this, all these big candles, Friday, COVID, risk off. As soon as you go risk off, your sentiment plays off. It's completely in control. Right. So pound suffered, AUD suffered here big time. And also this was bullish engulfing pattern, fresh touch, retest, failed to leave. Right, so we could have seen this coming, but I don't think anyone was in this trade. But if you're in this trade, you got burnt. You got burnt. I would have gotten burnt. But again, there were many higher supplies. I don't know why this was even marked up, right? So this is a better supply, complicated 365 candles to the drop. Markets literally filled the entire order block before falling. But for the most part, this is not something I want to trade. I don't think I want to trade this thing right now. So it's created a bullish engulfing pattern. Yeah, let's leave this alone. Let's leave this alone. It's not the most attractive thing to trade. Pound CAD. When you like those random months, I hate this chart. Range explosion. Scenario analysis tells us that's what it does. It's pretty much a ranger, an explosive ranger, blah blah blah. Still waiting for my sell order to get hit. I do avoid trading this, but I like this. So this is nice. So even though Friday happened, you know, this is the Friday candle, the COVID candle, the new variant COVID candle, risk assets, blah, blah, blah. They'll all be the same, right? You can see that from down here, we are starting to get good distribution, right? So all we need is something like that. And then I'm happy to sell there. I'm happy to sell. So we wait, pound CAD, we wait. We looked at CADJPY already. Cool, guys. Can we leave it here for now? It's been a beautiful 2 hours and a bit with you. I just want to quickly refresh and then film my master spreadsheet traders toolkit. The spreadsheet that you guys are going to see in tomorrow's video that I'm going to film right now. It's going to be uploaded on the remote course. I'm going to teach you how to use it in the video, and I want you to use it. Then every month, I will pull down the spreadsheet from the remote course and upload a new version. Or I could just start working off on the remote course. So maybe that's a better idea. So I'll just start dealing with the spreadsheet on the remote course, so that every single day you get an updated version. All right. So I hope that makes sense, but it will. Let me go catch a break, maybe walk the dogs for 20 minutes, drink some tea, and then film. Shake my hand, man. I hope this has been a productive war room for you. We went through a couple of assets, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, plus the Nasdaqs and the oils, about 15 assets, all right? 15 assets. I don't think that was a waste of anyone's time. I appreciate every single one of you. Please don't forget to like the video if you liked it. If you're still with us, shake my hand. And I'll see you guys tomorrow at 6 p.m. It won't be live. I'm going to record the video for you right now, but 6 p.m. tomorrow, it's well worth it. It's about an hour to 30 minutes, give or take. Watch that stuff because that's going to change the game. You're trading, right? So I'm now starting to extrapolate the simpler things we do in the senior traders room, just to throw you guys as many tools as possible to get you guys up there, because I'm getting a bit worried as a head trader. It's also nice. It's nice to see people trading and doubling accounts, but my goal is to create six-figure traders. That's like my desire. So 108 is good, but we haven't had a big jump of that number in the last 3 months. All right, and also we haven't really grown as an academy in the last 3 months. So maybe I should be fair on myself. But look, talk to you guys tomorrow. Appreciate you. It's been great. More life. Appreciate you guys. Thank you so much. Thank you for those of you on the chat there. See you guys around. Shake my hand. I'm out. I am out. Well, I'll be back, but